India, very, very tough. Very, very tough.
Trump just declared a trade war.
They took our businesses, they took our money, they took our jobs.
And this has caused a global market meltdown.
They do it to us and we do it to them.
But look at India, even the hottest, nicest, largest stocks are falling like crazy. So I want to answer two things. One, is the market actually going into a recession and we will fall so much that your portfolio will be worse than you think? Or two, the market is actually bottomed out and this is a good time to buy because all these stocks are available at great valuations. And I think the answer is in this chart here. If you look at this is not the stock market, guys. This chart shows that tariffs have been low for a really, really long time, but now this number has gone up. What does this really mean? This causes two problems. One, the actual price of everyday items goes up. And second, because each country is putting reciprocal tariffs to each other, global trade falls. And because global trade slows down, revenue falls down. Revenue falls down, demand is gone. Demand goes down, they think about future investor growth. They think it's not going to be that high. Because of that, markets fall. Maybe companies stop taking loans and capex expenditure goes down. And so many other things that can happen a normal YouTube video can never predict. So if the world will slow down because there is world trade slowdown, doesn't it mean that this possibility is possible? That means a recession could actually happen because there's just no growth. But why is America doing this anyway? America is doing it for three reasons. And this is not my theory. This is something that's floating on the internet. So the first thing that happens is that when they're importing with a higher tax, well, they earn more money. That means their deficit decreases. And second, because it is higher taxed and it's more expensive, people will prefer a locally made item versus an imported item. So the amount they import will decrease, further decreasing their deficit. When the overall deficit decreases, it strengthens the economy. The third thing, where will the demand come from? Because demand overall is low. They're saying that US will actually cut interest rates. When people cut interest rates, their buying power increases and therefore all that demand will go to made in America companies. Therefore strengthening the base of America and making it do well. But how is all of this connected to your portfolio? Look at your portfolio on one tab and see how horrendous and scary it is. On another tab, open all the news websites. All of them are scaring you and telling you how things have now changed and why this is scary. But I wanted to remove all of this. Let's just look at some data, okay? Very simple. How is India connected to the US? Exports, correct? Exports, the number we found is roughly $87 billion, give or take. $87 billion sounds like a big number, जिसके ऊपर tariff लग रहा है. So, of course, our country will be affected. But shouldn't we look at this number as opposed to our total exports? Okay, so our total exports are roughly 800 billion. So our total exports are 800 billion. What's being affected is around 87 billion. That's about 10% of our total exports. Is it bad? Yes. Is it so bad that you go into depression and you're scared that your portfolio is going to go to zero? No. Of course it's bad, but I think the internet exaggerates this a little bit. I'm telling you, it's all right. It's not as bad as the internet is claiming it to be. So does this mean that you should buy more equity? Hold on, sabar. Let's talk about one more data point. And this data point is actually a story. I want you to imagine this horror story that has happened for the last few decades. The mounting fiscal deficit decline, the balance of payments crisis, the Harshad Mehta scam, the dot-com bubble, the 2006 market sell-off, the global financial crisis, the coronavirus. Oh my God, that was actually scary. And now we have this. Every single time this has happened, the markets have gone up. And you can also see the same behavior in this chart right here. Look at the red bars. This is the return of Sensex from 1980 to 2025. Every time the market falls, afterwards it bounces back. Is this true just for equity? No. This is true for every single asset class. So even if the market falls another 15-20%, it's still okay because this is not in our control. But what is that you are mentally prepared that something like this could happen. So my point's very simple. If the market has gone through so many bad things and eventually still done well, no market guru can tell you where the market will go. So why bother? And why read the news and get scared? But I didn't answer this question, right? What about a recession? What about the market reverses? Here is the answer. Since no one actually knows what's going to happen, let's prepare for exactly both these scenarios right now. So on this side, we'll talk about what if the market goes through a recession, and that's what Nifty is like 22,000. Let's say it falls all the way to 15,000. That sounds scary. It's down 7,000 points, down 31%. What do? One, if the first thing you need to do before you invest any single penny is make sure you have the emergency fund. So your 1 month expense multiplied by 6 months. This is your nest egg. It's your emergency fund. Put it in a fixed deposit and leave it. This is really important. Then get life and health insurance. Then once you're left with some money, you must start investing. Now, if you're already invested, please, if you can increase your SIP right now, it's great because you'll be thinking about the next 10 years, markets are falling, you'll get better rupee cost averaging. It's a great time to continue to SIP for as long as you can. That's it. So every time the market falls, you know you are making a better future because you've got a better price as an entry. And then here we have if markets double in the next few years. The only thing you need to make sure over here is that you don't get greedy. Because as soon as this happens, you'll start buying small stocks that you don't understand and you'll think you're a genius. But actually, you're not. And neither am I or anyone else on the internet. And you know what? The point of this video is probably nothing. We realize that people look at the news, see the market fall and get really scared. And your brain right here, your mammalian brain and your reptilian brain will tell you to react with action, with panic. The fight or flight movement will kick in and you'll be like, "Ab main karu kya?" But you know the answer is nothing. You don't do anything except these things right here, but you sit and you wait and you're patient and you just enjoy your life. And your portfolio is too small a part of this entire global economy. Think about the next 10 years. ठीक हो जाएगा सब. Can you just go back to your life and enjoy it? If you have any questions, put it in the comments and we'll let you know.